Hey guys, how's it going? I want to do this video, really try to keep it short because the concept is simple and it's something that a lot of people seem to have trouble with. And it's called, and if you've been following me for a while on Twitter, you'll notice I'll put out tweets from time to time saying, look, take your stops. And unlike a lot of other people that are selling videos and services to train people, I do everything for free. I'm going to show you a bunch of losing trades I've had recently, trades that I got stopped out of, and how the stops really help save me from bigger losses. And that's why you've got to have a plan, you've got to have a method, um, you've got to follow it, and you've got to, no questions asked, if your objective trading plan, exit strategy is hit, then it's hit, and there's no second thoughts or maybe I should add to the position or anything like that. That's the way you're going to stay safe in this volatile environment where the market is toppy and things are looking very stage 3 toppy here with a lot of the whip that we see going along here. We go back to the Qs. Um, these wide candle days. Now again, if you look here on the daily chart, if I just let me just make this bigger here so you guys can see it a little bit better. This here is very similar to this, right? This September, pretty much September and October, we went down considerably, and here's the start of the same thing. So it could be the same thing. It could be a very similar month here, and then January we start moving right back up like we did here. But in the grand scheme of things, from a very long-term perspective, this thing is really tired, and the volume here has picked up a little bit. I think this is going to have more legs to the downside. But again, we've got to follow our plan. So it is really simple. I mean, it takes a lot of the stress out of it, but you've got to realize that you're going to have losing trades. It's a part of it's like breathing. You got to breathe in and breathe out. You can't just breathe in all the time. So, a winning system, you don't have to win more than 25, 30% of the time, technically, as long as your winners are a lot larger than your losers. So you could use the metaphor of, like, casting a lot of lines out there, like fishing, and going for the big fish, and knowing when you get one so you hold on to it. You don't want to be selling too early. You want to have fortitude and follow a trading plan to lock in profits as things go in your direction, as well as get out when things aren't. So let's look at a couple of things. I got some IBD 100 I'm going to share with you, but these are specific trades that I've been in where I got stopped out for losses. And you may have been in these with me. I mean, I've been talking about these. CGC here is one that I thought, in fact, I'm just going to make this daily chart bigger because we're going to focus just on the daily charts. Here, it's in a downtrend, and it looked like it was trying to bottom. And then we had this last day here where you see the big volume red bar that got negated by the green bar here, and it put it on radar for me to buy it in this area. So I did. Things were looking great. But then what happened? It came back down. And so you can see this little flag here, which technically, because we're in a downtrend, we're trying to catch the infancy of a stage 2 type uptrend, okay, off this bottom. And again, this could be just a continuation of the downtrend. This thing could go down, another 50, 60, 70, 95% from here. Who knows? But I was anticipating and fishing, if you will, right, for a bottom and a move back up here in this particular stock. And what happened is it came back down and it took out my stop right here on this day. You see this big red candle where it took out the bottom of this candle here. So I got out for a fairly small, tidy loss. And to me, it was worth the risk, right, to get in, anticipating more of a move up to this resistance area here around $20 a share where I would be taking my first lot. And then, of course, looking to add if it pulled back and set up again to go higher lows. But instead of setting a higher low, right, it made a lower low. And if you wanted to be more aggressive in that you wanted to give it more room, well, this stop here, the bottom of this candle, you can see was taken out right here. So you get out. Now, if you didn't get out, then you're still holding it here. And again, you're down quite a bit more than you would have been if you'd taken the stop where I got out. And that's where you can get killed, where something like this can really, really accelerate against you and really kill your account. NTLA is another one. This one here, if you go, let me pull this in here again. If you look at the weekly chart, it's in a beautiful uptrend. You have this big candle here flagging. Love this as a long, okay? And then so on the daily chart here, you can see here's the gap up, the big move up, try to go higher, made a little bit of a higher high, higher low, okay? Anticipate looking like it wants to go higher, then all of a sudden another higher low, but then collapsed, took out this low. So if you bought it in this area here, the higher low is typically your stop right here around 140, and when it gets hit, you get out. Now, if you didn't get out, and say you bought it on this little higher low here, say you bought it right here, at about 150. Let's just round numbers. And got out at 140, you're losing $10 a share. Now you're down $50 a share. You've gone from 150 to 100 at this point, and still holding the bag. And who knows? It could come down and fill this gap. It could go to zero. There's no, just because it's in an uptrend on the weekly and daily doesn't mean it's going to continue that uptrend. So we got to take our stops. So there's your first stop there. Now, if you bought this down here when it came down and retested this lower, say the gap right here, and you try to buy it here on this breakout, as soon as this red candle came in and took out the low of these bases, you can get out. That's your most conservative stop. And if not there, then right when it takes out 120, 119, right here. So this is one I got stopped out of a couple times, actually. I took it a couple times, got stopped out. And again, it is what it is. To me, it was worth the risk to do it, but I'm not holding the bag now. And now what am I doing? I mean, right now, the uptrend is in doubt as it continues to move lower, and we'll see if there's gap support here at around $90 a share when it comes back down. So there's another example of one that I've lost on recently. XENE is another beautiful one. Look at this weekly chart, right? Going higher, looking great. I bought it in this area here. My stop was under these lows. Rode it all the way up here, and then rode it right back down and got stopped out right here on this day. You can see this candle took out the bottom of this, and then it continued to roll lower, and it's now taken out the bottom of this candle on a bigger candle day. Now I'm interested because it gapped up and it came right down. This could have been the cleanse day. So the uptrend here is still intact. In fact, on the weekly, it's pulled back to the rising moving average in this area. This is actually on my scan list for a possible long going into next week. So XENE, even though I've been in it, lost on it, had a losing trade, got out. Now I'm looking to reconsider buying. And that's the beautiful thing about the world we live in today when we're trading, guys. The commissions are nothing in most cases, right? So definitely take advantage of that, and buy back in if your setup is there, if it's a shakeout. Ryder's another one I talked about. You can see the uptrend here on the weekly. It was coming up here. You see the pullback. You could buy it in this area here. If you bought it in this area here, where's your stop? Right here when it took out this red bar here. But then look, it came right back up again. And then, so say you bought it here, your stop's here. You buy it here. When it hits your stop, you get stopped out, lose. Green bar, oh, try to jump back up. Okay, that might be the lower low where it's still in an uptrend here, and it's just did a shakeout. We're going to go back higher. So you could have bought it again here, but then where's your stop? Right under that bar right there, right where the pivot is, or under this one. Either way, you can see here on this day, it took it out, reversed back up, took it out, and then all of a sudden this big red candle takes out everything here and here, and now we're drifting lower. Okay, and we're pushing on the 40-period moving average here on the weekly chart, and we're down here to the 200-period moving average on the daily now at this point. So in and out, a losing trade, but at least you're not holding the bag. This is how you're going to survive if the market continues. And we've got stuff that's been freaking crushed. Look at Docu. Now look at this thing. This thing was in an uptrend, looking good in general. It's been a great trade, great stock, right? This move here. Look at this move. And then today, or not today, Friday, look at this gap down. Now, again, this can happen. So referencing, say, for example, if you got in this thing here, let me just take this daily chart out here real quick. Okay, so you can see the uptrend's dying here on the daily chart anyway. Now, this is one I haven't been in. I did not trade this one. But you see the double top here. When it comes down here, had I been in this, this would have been 280 would have been my stop. Okay, so I'm teaching you right now these pivots and these support points is where I kind of how to put your stops in, and just get out when it hits there. And then it goes lower. It makes lower highs and lower lows. Then all of a sudden it makes a higher low and a higher high. I say, okay, well maybe it's starting to come back up. But when it retests here, topping tails out, and another big red candle down, that's an ominous sign. Now, I didn't get short this name either. I have not traded this. This just came up on the IBD 100 list. I know a lot of people follow the IBD 100. I think it's a great list to follow if you're looking for ideas to trade. But this is one that's fallen apart. You can see that overnight, ouch. I mean, that is painful. Now, if you're not taking your stop here, say you got in here or was playing here, well, where's your stop? Hopefully you can see that your pivot point here around 240 is where it is, and you had plenty of time to get out before this happened. And typically this happens on like earnings days. Okay, and that's probably what happened with Docu. I don't know. I'm not going to go look and see if it was an earnings that crushed this, but I'm guessing that's probably what it was. ASAN. Okay, another one here that's been, look at this uptrend on the weekly chart. Strong, right? And then it's trying to go higher, higher high, lower high, big red candle. There's your stop right there, 120. Right there, you're out. Okay, and then you're saving yourself a lot of pain. Imagine getting out of 120 versus 70, which is where it hit on Friday. So when it does this, guys, and it takes out your stop, just get out. You can always get back in if you get your setup. So say even if you said, okay, well, it's a support here, and it came down, and you bought it here, and then when it turned around and did this bar here and took out the lows, that's where you want to get out. That's where you want to take your protective stop. Now it's a losing trade, but again, losing trades are not a big deal. Get used to them. If you're gonna trade for a living, you're going to have many losing more. I have more losing trades than I have winning trades. I'm going to tell you right now, and I've been doing this for 20 plus years. I have more losing trades, a lot more losing trades than winning trades. But yet, I support my family through this. So how does that happen? Well, it's because you have to have a method, and you have to allow yourself to take losses and not get bent out of shape and not put yourself down. You're taking shots, you're fishing, you're casting those lines out there, and you're looking for that big winner. And I'm going to do a second video on the cryptos, completely different this weekend is my plan. Because they had a massive move lower. I mean, we're talking 20, 25, 30% moves in literally 5 hours on Friday afternoon in the U.S., where things lost, I mean, huge amounts of values, just climactic type moves down. And they're trying to stabilize now. Now, the weekend's going to be a little bit more squirrely with volumes. So I'll talk about that in a separate video. I'm not going to digress anymore from this. So I wanted to point these out for you. Now, CrowdStrike's another one that's been really popular, right? Look at the move down. Look at all the chances you had to get out if you were in this long on the, let me make this bigger again, on the daily chart. So right here you're seeing, it's messy, absolutely, but you got, basic big higher pivot lows, higher pivot highs. It's uptrending, although it is messy, looking very stationary, kind of like the market is now. And then all of a sudden here, this big red bar, then this retracement right back up, and then coming down hard. It took out a stop here on this day. Should have been gone out of this, taking your profits as you've been riding it for a while. Or if you got in late, then you take your loss and you take your lumps and move on. Here's another chance when it came down here and took out this stop out that day. Don't you want to save $40 a share? I think you would, right? Here's another stop just slightly lower. You had 3-4 days to get out when it took out this stop right here. Right? And then it came collapsing down. So take your stops. I can't emphasize it enough. If you want to survive in this game, it doesn't matter, even in this environment where things are getting a little bit more squirrely, a little more volatile, you've got to take your stops to protect your capital. Otherwise, you're going to hold on, and you'll be holding on to stocks forever. So if, say, for example, you're in CrowdStrike here, now what do? Right? Well, I mean, you buy more. It's probably not a good thing. What I do, I mean, I'm not in this situation. I'm out. I'm done. I'm done with this thing, and I'm looking for opportunities. Just like I said with the XENE, I'm looking for opportunities to get back in. NTLA, I'll be watching that one. Moderna is another one that I talked about in a recent video or previous video where I was long on this thing, riding it up, loving it. And then when it stopped me out, it stopped me out. And like I said, thank God. I mean, this thing came all the way down here to almost $200 a share from $450. Huge losses. And now it's gone ripping back up, obviously. And now it's pulling back. It's made a higher high, trying to make a higher low. This thing might have some upside potential, so watch it. Okay, but it is volatile, and it is gappy. And if you hold things overnight, you have to have a plan overnight. So, for example, let's go back to DocuSign. Say you were holding this thing, and you wake up and it's down here. What do? Well, do you just get out? That's one option. You have really two options. Get out right away, no matter where it is. If it gaps well below your stop, so say you got in and you're thinking, "Oh, my stop's at 225," and you wake up and it's at 150 when it opens, right? That's a bad morning. But what do? Well, you got to make a decision. I mean, it is what it is, right? So you can get out right away. That's one option. Second option is you can let the issue trade for about 30 minutes or so, and then set off the high of the day, low of the day. If it breaks the low of the day, just get out. If it breaks the high of the day, you can look to just ride it back up and take it, or if you could just say whatever the 30-minute low is, set your stop now, move your stop down there, but you've got a massive loss compared to what you were anticipating losing originally. And the danger with that is look at Moderna. So say this day here it gapped down and it took out your stop and you didn't take it. You're like, okay, well, I'm just going to put it at the low of this day, and the next day you get up and it's down another one, right? This can happen. This can really, and so it may be just best to get out completely. Or the third option is, so there's first option is sell everything right away. Second option is 30-minute highs and lows. Use those and then set your stops there. Move your stop there, but realize that you're now losing a lot more than you anticipated, but it is what it is. When you hold it overnight, you run that risk. On the same side, and the positive glass is half full side, it could also gap in your favor $30, $40, right? So you have that to deal with. Do you take profits on something like that? That's a whole other topic to discuss later. Third option is sell half or a portion of your position. So say you have say you're trading 100 shares, and this does this, and you had your stop here under 320, and it opens up at 290. Well, just sell 50. Sell 50 shares. The other 50 set it off for the low. But then guess what? In this particular case, you would have gotten crushed on that next 50. Right? And then you hold and hold and hold, and then if you had held, you would have gotten lucky because you would have gotten this nice run back up. But who's to say you would have ridden it all the way, right? You may have gotten out right here. You may have gotten out right here. You may have gotten out on this day right here. Worst case scenario. So you don't know what's going to happen, and you don't need to know what's going to happen. You just have to follow your rules. Hope this helps, guys. Hope you found this useful. Until next time, I'll see you in another video.